When I first learned advanced chart patterns like head and shoulders and triangles kit, I thought I had finally graduated into the serious ranks of trading, because these patterns came with names, symmetry, and confidence. And confidence is intoxicating when you don't yet understand what you're really looking at. Early on, I treated these formations like contracts, as if the market had signed an agreement to behave a certain way once the shape was complete. And that assumption cost me more money than any beginner mistake ever did. My first real encounter with a head and shoulders pattern came after a long rally, the kind that makes everyone feel smart. The left shoulder formed the head pushed higher. The right shoulder failed to match it, and every book I had ever read told me the same story. Trend reversal distribution, smart money exiting. I shorted aggressively the moment price broke the neckline, convinced I was early disciplined professional. And then price snapped back above the level chopped sideways and bled my confidence dry before eventually rolling over weeks later without me. That trade taught me a lesson. No charting course ever did. A head and shoulders pattern does not mark the moment of reversal. It marks the process of exhaustion, and processes take time. Institutions don't exit positions in a single clean break. They distribute inventory while liquidity is still available, and that distribution often looks messy, overlapping, frustrating. When I treated the pattern as a signal, I was early. When I learned to treat it as evidence, I became patient. The head represents excess, the final push, driven by late enthusiasm. The shoulders represent diminishing returns where effort no longer produces new highs. But none of that tells you when to act. It tells you to stop assuming continuation. Triangles taught me a different kind of humility. Ascending, descending, symmetrical on paper, they look like compression before expansion energy coiling for release. Early on, I traded every triangle like a breakout waiting to happen, placing orders just outside the structure, eager to catch the move the moment it escaped. Sometimes it worked. Often it didn't. False breakouts whipsaws stop runs that felt personal. What I didn't understand then was that triangles are not about direction, they're about agreement. They show you a market where buyers and sellers are negotiating where volatility is shrinking, because neither side has enough conviction to take control yet. The breakout doesn't matter unless participation expands. A triangle that breaks without volume is not a signal, it's a test. And tests fail more often than traders like to admit. Over the years, through multiple market cycles, I stopped drawing these patterns to predict what would happen and started using them to understand what was no longer happening. Head and shoulders patterns told me momentum was weakening, not that price had to fall immediately. Triangles told me uncertainty was increasing, not that a big move was guaranteed. That shift in interpretation changed my behavior completely. I stopped front-running patterns and started waiting for confirmation that aligned with context, trend, and risk. I learned that the most dangerous versions of these patterns are the ones that look perfect. Clean symmetry invites crowds, and crowds create liquidity, and liquidity attracts players with much deeper pockets than mine. When everyone sees the same neckline or the same triangle boundary, the first move is often designed to punish consensus. That doesn't mean the pattern is invalid. It means the timing is wrong. Advanced chart patterns are not advanced because they're complex. They're advanced because they require restraint. They demand that you wait for acceptance, for follow-through, for evidence that the market has actually chosen a side. I also learned that context determines everything. A head and shoulders at all-time highs after months of euphoria is a different creature than one forming inside a range. A triangle after a strong impulse move behaves differently than a triangle born out of chop. Treating them the same is how traders turn pattern recognition into pattern blindness. The biggest breakthrough for me was realizing that patterns don't work because they're right. They work because they influence behavior. Traders act around them. Stops cluster around them. Expectations form around them. And institutions understand this better than anyone. They don't respect patterns. They use them. Once I accepted that, I stopped asking whether a pattern would work and started asking who would be trapped if it didn't. That question kept me out of more bad trades than any setup ever put me into. Over time, Head and Shoulders patterns became warning signs, telling me to tighten risk and reduce expectations, not to rush into reversals. Triangles became patience drills, reminding me that expansion is only meaningful when it's earned. I learned to trade fewer patterns, not more. To wait for confirmation that didn't require hope. To accept that missing the first move was often the price of avoiding the worst one. And kid, that's the truth about advanced chart patterns. No one tells you they don't give you certainty. They test your discipline. They ask whether you're willing to wait when the picture looks obvious, whether you can hold back when the crowd leans in, whether you can let price prove intent instead of trying to predict it. When you fail those tests, the pattern becomes a trap. When you pass them, the pattern becomes context, a quiet piece of information that helps you decide when to engage and when to stand aside. That realization marked the moment I stopped drawing patterns to find trades and started using them to manage behavior. Because behavior, not geometry, is what ultimately determines whether these formations help you or hurt you. And that understanding only deepens when you're willing to watch how price behaves after the pattern is visible, not before. Because once a pattern is obvious, the real question is no longer what the textbook says should happen, but how the market reacts. Now that everyone thinks they know what comes next, and that reaction is where the real information lives. Information that only reveals itself if you're patient enough to wait and disciplined enough to not act too soon. Because acting too soon is where most traders fail, with Head and Shoulders and triangles a failure. I repeat it often enough to finally learn that these patterns are not triggers. They are environments that demand observation, context, and restraint. And learning to operate inside those environments without rushing is what finally taught me how to operate within those environments, without rushing to conclusions, because once I accepted that Head and Shoulders and triangles were contexts to manage, rather than signals to obey, my trading slowed down in all the right ways. In the later years of my career, I learned that the real edge with these patterns wasn't spotting them early. It was resisting the urge to act the moment they became obvious. A Head and Shoulders pattern that everyone can see is rarely finished when the neckline breaks. It's usually just beginning to test who is committed and who is impatient. I learned to wait for acceptance below the neckline, to watch whether rallies back into that area were rejected cleanly or welcomed back with ease. That behavior mattered far more than the break itself. When price reclaimed the neckline quickly, I treated that as information, not betrayal. It told me distribution wasn't complete yet, and fighting that reality was how traders got chewed up. Triangles demanded a different kind of restraint. Instead of betting on direction, I learned to wait for expansion with proof. A real breakout didn't just move beyond the boundary. It held it attracted follow-through. It refused to slip back into the structure. When that didn't happen, I stood aside. Over time, I noticed that most losing trades around triangles came from trying to be first instead of trying to be aligned. Being first feels smart. Being aligned pays. I also learned that advanced patterns work best when they agree with the bigger picture. A Head and Shoulders against a dominant higher time frame trend often resolves sideways longer than expected, draining impatience before anything meaningful happens. A triangle forming after an impulsive move tends to resolve in the direction of that impulse, but only after enough time has passed to reset emotion. Ignoring that context was how I kept mistaking possibility for probability. And kid, here's the truth most traders don't want to hear. The more you rely on patterns, the more vulnerable you are to crowd behavior. Patterns attract attention. Attention attracts liquidity. Liquidity attracts players who don't need to be right immediately. Once I understood that, I stopped trying to extract certainty from geometry and started using patterns to decide when to reduce size, when to wait for confirmation, and when to stay out entirely. That shift turned advanced patterns into defensive tools first and offensive tools second. They protected me from overconfidence. They warned me when expectations were stretched. They reminded me that the market doesn't reward recognition, it rewards restraint. And if there's one lesson I want you to carry forward, it's this. Head and shoulders and triangles don't fail traders. Traders fail them by demanding they act like signals instead of environments. Used with patience, they help you align with behavior. Used with urgency, they turn into traps. If this story helped you rethink how you use advanced chart patterns in your own trading, take a moment to leave a comment with your thoughts. And don't forget to subscribe so I can keep sharing the lessons the market spent a lifetime teaching me.